Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Asia podcast. I'm Doug Krisner. You can join Brian Curtis and myself for the stories making news and moving markets in the APAC region. You can subscribe to the show anywhere you get your podcast and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.
The Reserve Bank of Australia is set to keep its policy rate on hold, but there are some interesting complications. Joining us now is James McIntyre, a Bloomberg Asia economist covering Australia and New Zealand. So we've had a dovish tilt here, but then, let me put it to you. What do you find most interesting about the background to this decision?
Oh, look, I think that's a good question. We have seen the RBA be a little bit dovish in February, a little bit more dovish in March, but right now it's looking like we haven't heard much from the RBA since their last meeting in March, but it's likely that we're going to get almost a bit of a 180, but not the full 180 to a hike, but we're going to see, I think, the RBA become a bit more hawkish today. So it's not just something that's following the Fed. There's a whole heap of domestic economic news and data that's sort of driving this shift down under.
So from what I'm reading, and correct me if I'm wrong, James, the market is still pricing in a hike at some point this year. Can you give us an understanding of what's happening in Australia's economy that would allow the RBA to kind of make this hawkish pivot and for the market to continue to price in a hike at some point?
Yeah, well, look, it's really interesting that market pricing, how significantly that's shifted compared to when the RBA last did a set of quarterly forecasts. They're going to have a new set of quarterly forecasts today. Compared to back in February when they last forecast, the market was pricing in over 2024, 75 basis points of cuts and then another 40 or 50 basis points of cuts in 2025. Today, however, the RBA has got the markets are pricing a very, very different situation with that potential or a hike partially priced in for later on this year. When we look across the economy, though, what's behind this shift in markets? Well, we've had an unemployment rate that has really surprised. There was some incredibly strong jobs growth that we had in February, and we all expected in March that would reverse course, a bit of statistical payback. But what happened was that the unemployment rate didn't move the way we would have thought, and so instead the RBA is looking at a much, much tighter labour market. And then we got inflation data for the first quarter. For the March quarter of the year, we had particularly the underlying inflation. The RBA focuses on a trimmed mean measure, which removes some of the outliers within the CPI basket. That trimmed mean measure grew by 1% in the quarter, very much showing that we're a bit of an interruption on that disinflation path. These are the sort of the two key pieces of economic data that have set that market pricing moving the way it is and that whiplash from February. But when we look at the other data on the economy, consumers and spending, it's still a very, very weak story. Retail sales data coming out and disappointing. We're looking that we will see, even if the economy grows overall in per capita terms, because we have that strong population growth, per capita GDP will be extending its recession. So there's a very, very weak household sector, but nonetheless, some of these concerning things still out there, from inflation not dissipating as quickly, still falling, but not fast enough, and the labour market being a little bit tighter. And I think those are the things that markets are focused on.
Bloomberg Economics believes that a cut is actually the next move.
Yeah, that's my call. So my base case is that we're still we've got this little bit of an interruption right now, but in the what was looking like an immaculate disinflation and a continued march toward easing, this is a little bit of a speed bump. But we think that as that weakness in the economy persists, the migration boom begins to ease back, taking some wind out of the demand side of the economy, that we'll see that unemployment rate rise, that inflation fall away, and we will still be on track for the RBA's next move being a cut. Today they're going to sound hawkish, but it's going to be a threat, not a delivery.
Okay, so the market will do a lot of the work for the RBA then? Is that what you're saying?
Very much. And this is where that very big shift in market pricing is actually going to do a lot of heavy lifting for the RBA. They factored in those rate cuts into their last set of forecasts and had inflation going back towards the middle of the target band in February. So we've got about inflation being about 20 basis points higher than we thought for the starting point, but we're going to have 60 to 70 extra basis points of monetary policy tightening being baked into their forecasts. And that's going to be what cools growth, keeps inflation heading to target, and is really going to be about that difference between the RBA making the threat and delivering. The threat is what they're going to be safe with for today.
You mentioned that consumers were tilting a little weaker, and in some cases we see that in the United States as well. And we do have sort of deglobalization and industrialization and reshoring that's kind of helping out in the United States. In terms of mitigating factors for the Australian economy, I'm just curious to bring this around to China. Does China trade factor in very much? Does China tourism matter very much? And basically, is our exports going to play an important role in the revival of the Australian economy?
Well, one of the things that's been a big part of the strength and the revival in the post-COVID recovery has been a type of tourism from China, and that is international students. So when we, as economists, when the stats agencies measure these things, they call education exports part of the tourism services export sector, and those students have come back to Australia in a big way, and that's what's driven up that population story, that migration boom. It's what's holding up house prices and creating a real tension within rental markets, a little bit of an inflation headache there within that pocket of the economy for the RBA from that return of not just Chinese but also Indian students. Looking forward, the China story for Australia, look, it's not just those services exports, it is about that commodities story, and especially with steel and iron ore. So we've had a real kind of flashing red light from China's cratering property sector for the last year or two. But critically for Australia, iron ore prices and iron ore demand have remained quite high. So we've still been managing to bumble along with strength in other parts of the global economy. Australia's exports being commodity based.
You mentioned property as it relates to China. What's the property story right now in Australia, particularly in an environment where credit is pretty tight?
So credit has been tight, but the property market, we've seen residential house prices continuing to grow, record highs. Now there's a bit of a two-speed story going on within the economy. Melbourne and Sydney house prices are a little bit softer. That's the two main cities, and most of where the international migration comes into. They're very, very stretched on affordability. Rate hikes are hurting there, whereas in other cities, affordability is so much better, and we're getting a very big boom. So there's a big lot of help there from the population story, and still a bit of strength despite rates.
James, thank you so much. James McIntyre, Bloomberg Asia economist covering Australia and New Zealand. And again, the RBA is set to keep its policy rate on hold, but may tilt a little hawkish. Here are the headlines from President Xi's trip to Europe. Obviously, the trip has begun. The EU says we're ready to use all trade tools to defend against China. President Xi has urged Emmanuel Macron to help China avoid a new Cold War, and Hungary plans at least 16 agreements with China during this visit. So joining us now on the program to discuss a little bit of this carrot and stick approach is Rebecca Choong Wilkins, Bloomberg Asia government and politics correspondent. We're seeing a little of both here at the moment, and it seems like Ursula von der Leyen was carrying the stick.
Yes, I mean, this is sort of really interesting because part of this whole trip is the balance between what the EU wants, and they are, of course, the bloc that have rolled out this litany of probes, versus the interest of specific member nations, and where those two sort of conflict is precisely where Xi Jinping hopes to kind of make his point that actually to individual countries such as France, but also, for example, such as Hungary, it's more advantageous to actually pursue more open economic trade barriers and so on, rather than kind of supporting the EU's more hawkish stance, which of course is closer to the US position.
So the French finance minister Bruno Le Maire has used the term happy globalization and advocating for the end to it. I mean, when you look at the bloc, the European Union, this is an incredibly large market for China to export into. Is the administration, or when I say the administration, Xi Jinping, the leaders in Beijing, are they at risk of damaging this opportunity for them to be able able to kind of allow the Chinese economy to recover, yes, but not necessarily going hog wild when it comes to exporting all of the overcapacity?
I think it's incredibly important, and I think that's in part why, of course, we are seeing Xi Jinping going to the European Union at this moment, the first trip in 5 years. The bloc is incredibly important in also supporting that growth. Of course, we have seen China shift to the the so-called new three drivers of growth, which includes all of these products, EVs, batteries, solar panels, which are the very focus of the EU probe. So it is essential from Beijing's point of view to keep this channel open. Now, they have been firm that, Xi Jinping has said there is no issue of Chinese overcapacity. And there has been debate, even within the EU too, about precisely how sharp or how pointed that effort is. And I think from Beijing's point of view, there is this worry that the EU is falling lockstep in with the US without actually sort of considering the specifics of that overcapacity issue and the real pain points. The sort of worst case scenario, of course, for Beijing is that the EU launches into a full trade war, or even before that, sort of introduces these prohibitively high tariffs on things like EVs.
The Chinese papers, of course, are saying that the French president thanked Xi for a commitment not to sell arms to Russia, and also that they agreed or they support an Olympic truce during the Games in Paris. Can you fill in some of the details on those two?
Yes, I mean, this has been a huge sticking point, I think, not just for France and China, actually, it should be said, but for several European nations. There has been increasing frustration with China and what is perceived to be its lack of movement in trying to halt the war or bring about a ceasefire that is more amenable to the Ukrainian side. Of course, China does have its own sort of blueprint for peace, we may call it, but that has not been sort of palatable for many European nations. And so it still is a problem. I would say that although there is this discomfort between these sort of cozy ties between Xi and Putin, we have actually seen trade between Russia and China fall in March. That's the first time since 2022. So it does look like some of these sort of threats of reprisals, particularly from the US side, but also echoed in some parts of the European Union, may be actually having an impact on that trade between China and Russia, which of course has helped support Russia through the course of the war and sort of counteract the balance and the effect of sanctions, for example.
So, Rebecca, what are we expecting from Xi when he visits Serbia and Hungary? How might his relations in those countries differ than what we have been seeing in France?
Yeah, this is going to be a really interesting portion of the trip, I think, and in two sort of big ways. The first is that this is Xi Jinping's real opportunity to showcase the advantages of engaging with China. These are two countries that are very friendly to China, that have accepted various investment projects. For Serbia, that's more sort of industrially inclined, more about steel. For Hungary, we've seen, for example, BYD agreeing to open a factory there, among other plans. There's also railway potential investment opportunity too. And so this is sort of the carrot, the carrot part of the trip, to use your framework, showcasing that China, if you let in some of its and you remain open to its investments, can bring in its own companies, but can also create jobs in that market. The other part is to send a signal reaffirming ties to Russia because of both of these nations' own close ties to Russia.
All right, Rebecca, thank you. Rebecca Choong Wilkins, Bloomberg Asia government and politics correspondent.
Let's take a closer look at the situation in Gaza. Ed just reported that Israel has stepped up some attacks in the southern city of Rafah. This came just hours after Hamas said there was a ceasefire proposal that had been drafted and put forth by mediators from Egypt and Qatar. But Israel's prime minister was unwilling to accept those terms. Our guest now is Ariel Cohen. He is a senior fellow at the Atlantic Council. Ariel, thank you so much for being with us. It's always a pleasure. Give me your sense, with all the news flow and how volatile the situation has been, give me your sense of where we stand at the moment.
First of all, it's the Holocaust Memorial Day today. We remember 6 million Jews, including 1.5 million children, who were slaughtered by the Nazis in World War II. So just to put things in perspective. Second of all, I'm distraught that after the attack on Israel on October 7th, the radical students and professors in Ivy League and other schools in this country decided to destabilize America, destabilize the campuses, destabilize the learning process in favor of their support of Hamas. This is untenable, unimaginable, and here we are. Finally, in terms of the reporting that Israel rejected the proposal, my understanding is that Hamas rejected the proposal just until today. And when Israel started preliminary bombardments of Rafah, the last city where the Hamas leadership is holding up, presumably with the hostages, only then Hamas started saying that they accepted something which Israel says they didn't see. Israel did not see the proposal that Hamas is allegedly accepting.
Yeah, there's a lot in what you said there. I think that we need to push back on a little bit. I mean, people who know you and people know you on this program know that you're a strong proponent of Israel, and that's understandable. One thing that you said was that Israel's not very familiar with exactly what's in the proposal, although in most of the reporting it says that Hamas agreed to a ceasefire proposal and that the Israeli cabinet rejected it. Secondly, you said that the students are showing their support of Hamas. That is not completely correct. They are supporting Palestinians, and they are unhappy with the treatment that average Palestinians have in Gaza, and the fact that so many are homeless and so many have died. So my question, I guess, goes to how concerned are you that U.S. public opinion certainly feels as though it is swinging a little bit away from Israel? And how much danger do you see in that?
I see that this is probably a watershed for this country, first of all, when students are calling for a ceasefire in a war in which a democracy and an ally of the United States, after a horrible attack, the equivalent of 55,000 Americans murdered in one day, is trying to defend itself and do what we tried to do with ISIS and Al-Qaeda, to destroy the leadership of the organization. And if we today don't recognize who are the allies, who are the enemies, what the purpose of the enemy is, which is the global caliphate, after all, Hamas is an offshoot of the Muslim Brotherhood, a jihadi organization. As they say in the Middle East, the grandmother or the grandfather of all jihadi organizations, including Al-Qaeda and ISIS, then this country is really confused. We're confused who our allies are. We gave up and abandoned our allies in Afghanistan. It took us 6 months to deliberate about support of the Ukrainians who are fighting for their lives. And now we're signaling, and the administration, I talked to senior officials in this administration who say we're threatening Israel with cutting off military supply. We're threatening our most committed ally in the Middle East, bar none, with cutoff of the military supply. Yes, it is a war, and in war people die. And hundreds of thousands of people died in the Middle East after 9/11.
So, Ariel, let's imagine a world where the upshot of the demonstrations that you have described serve to undermine support for the Biden administration, and maybe former President Trump is reelected to another term. What does this do to the situation that we're looking at in Israel and more broadly in the Mideast?
First of all, I think it is ludicrous, if true, what Politico was reporting yesterday, that some of the major donors of President Biden and of the Democratic Party, including George Soros, the Rockefeller Fund, the Tides Foundation, allegedly the Pritzker family, are donating directly or indirectly to these demonstrations that may shift the vote of the students to the likes of Jill Stein of the Green Party and Cornel West. And these 2 or 3% will be sufficient in the battleground states for Mr. Biden to lose. Is that what these donors and these students want? Do they really want Donald Trump to win? And if Donald Trump wins, nobody knows. It's totally unknown what his position is going to be on anything. On Russia, on Ukraine, on the Middle East, on China, we do not know. And we saw there was a strategic shift by Trump and by Speaker of the House, Mike Johnson, on Ukraine. And I was very happy about that because I support independence of Ukraine and its territorial integrity. But as I said, these demonstrations are empowering the Trump momentum in these elections.
That is certainly something that is being considered at the moment. Ariel, it's always a pleasure. Thank you for joining us and filling us in on your thinking, your perspective. Ariel Cohen is Senior Fellow at the Atlantic Council.
This is the Bloomberg Daybreak Asia podcast, bringing you the stories making news and moving markets in the Asia Pacific. Visit the Bloomberg Podcast channel on YouTube to get more episodes of this and other shows from Bloomberg. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen. And always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.